I'm speechless. No, and I would not follow that advice at all whatsoever. I mean,
welcome to another edition of Property Breaking News. My name is Ranjan Bhattacharya. In our last edition of Property Breaking News, we explored the government's new bounce back loans scheme. Now, since we released that video, it's caused uproar on the interweb with all sorts of comments from all sorts of people saying all sorts of things. Can you claim it? Can you not claim it? Well, that's the subject of this video. So what's coming up? We're going to be looking at which banks have actually paid out to property businesses. We're going to be looking at which banks have imposed some specific criteria for the bounce back loan scheme. We're going to be looking at some of the uproar that's been created on the interweb about definitions of terms such as what does a group of companies mean and what does trading income mean. We'll be exploring some of that. We'll be looking at the self-certification of your turnover and some little traps that you've got to be wary of. And on some corners of YouTube, some have been putting out videos saying that you don't have to pay this loan back. Well, it is a loan and you have to pay it back, and we'll be explaining the consequences of not doing so. That's all coming up. My name's Ranjan Bhattacharya. I've been investing in property for 30 years. This is my channel. We put out new content each and every week, all dedicated to helping you be more successful in property. We've got over 16,000 subscribers now, and our subscriber count is growing by the day. So subscribe and hit the bell icon, and you'll get a notification as soon as we upload. Like this video, it really helps us out on YouTube with the algorithm. And also start the discussion. Let us know if you've applied for your bounce back loan, who the lender is and what success you've had, or if you've been rejected, or if you've had any issues, or you've got any questions on what we're talking about. Leave them in the comments below. I'm joined in this video, as I was in the last video on the bounce back loan, by Andrew Roberts, who is a currently qualified management accountant. I got that wrong last time, didn't I, Andrew? So, currently qualified management accountant and also renowned property investor. Thank you for joining me again. So have you seen some of the hoo-ha?
there certainly is a lot of comments flying back and forth, and certainly what I would call social media bunkum out there. And I'm delighted that you've invited me along to try and bust some of those myths that are kicking around.
Now, when we actually did the first video, it was very early days, and we were pretty much just out of the starting blocks ourselves, and with getting these things done. So now we know from our own applications and colleagues that we work with, the kind of banks that have actually backed property investors for these bounce back loans. Can you share with us who has actually paid out?
While we were recording our interview last time, I'd applied 7 a.m. on the Monday, and on the Tuesday, while we were doing our interview in the morning, the funds dropped in my account. So Bank of Scotland paid out like a greyhound out of a trap. Again, the Lloyds Banking Group as a whole seem to have got hold of it and run with that ball and been paying out really quick on their applications.
I mean, they are, of course, owned by the taxpayer, aren't they? So I guess they had to. But yeah, carry on, yeah.
Yeah, absolutely. But in terms of some of the other groups, HSBC seem to be sort of lost a little bit in this process. They've been taking applications in, but not processing them and pushing them out as fast as the Bank of Scotland Lloyds Group. But they are now releasing the funds. And I believe you've had some of those funds through yourself.
Yeah, we've had some, and I know other people that have had some. I think the thing with HSBC, their process seemed to be a bit of a black hole. You would apply, but there was no acknowledgement email. There was nothing to tell you how it was going, and then it was just all of a sudden, here are the documents to sign, and that's it. But no, carry on. I mean, who else have paid out? I mean, let's just list the ones that you've heard that have paid out.
Ones that have paid out, RBS have paid out, Co-op are paying out, NatWest are starting to pay out, but they've been slow. AIB have been paying out, and Yorkshire have been paying out. So pretty much most of them have been paying out. TSB went live, I think it was Thursday. If it wasn't Thursday, it was Friday of last week. So they were quite late. Starling only went live this morning, and we're taking applications. So all of those are sort of coming to the party, but coming late. Santander seem to be in a pickle, as do Barclays with the process.
But I know people from Santander who've got Santander accounts and Barclays accounts who have reported that they have received money. So, I mean, some people are, it depends where you are in the queue, I guess.
I think it depends on where you are in the queue, because Barclays systems keep falling over. Barclays also have a problem where if you've got more than one account with them, they actually restrict multiple applications. So I think their systems have been problematic for users to get on and get applications processed quickly, because they've not been up and stayed up for long.
So what's been causing a lot of controversy all over the web is, are property businesses, and particularly landlording businesses, eligible for this bounce back loan? Can we claim it? Can we not claim it? What's getting a lot of people tied up in knots is the meaning of specific phrases and words in the eligibility criteria. Now, particularly trading income or trading activity. What does that mean? Some accountants are applying an accounting definition to it. I mean, this comment is a classic.
I'll eat my hat if landlords get this money and it isn't clawed back.
Okay, so this guy making the comment is a qualified accountant, but my thinking on this is that this is a loan application. This is not a tax return. This is not a accounting rules and regulations or an account submission. And layman's definitions or layman's meanings apply unless defined otherwise. What's your take on this?
I would completely agree with you. You are entering into a loan agreement. And when you sign the loan agreement, you're signing a contract with the lender. So it's important to look at the terms and conditions that the lender puts down, not some accountant or HMRC or as appears in other places. Now, if I quote the Co-op application, it specifically states, to quote verbatim, all sectors can apply, excluding banks, insurance companies, and public sector organizations and private individuals. So it does not exclude anybody within the property sector. Now, to go one further, if we looked at Barclays specifically make reference to the property sector can apply, and it details out. So you're signing a contract with a lender, and if the contract does not say you cannot apply, then you can apply.
That makes a lot of sense, because what you're basically saying is some lenders have gone down the route of applying specific or clarifying criteria as it relates to the way that they want to do the lending. But nowhere does it say meanings for words shall come from HMRC tax manuals or accountancy practices or rugby union rules or cricket rules or whatever. The definitions are layman's normal English definitions unless explicitly said otherwise in this loan contract. And of course, landlording is not a passive activity, it's a trade, isn't it, Andrew?
It absolutely is. I mean, I've got people, I've got systems in place, I carry materials in stock, we hire people as freelancers to come into our business as well and support the activities that we undertake. So for me, passive is I've got some cash, I'll put it in some shares, I'll buy some gold, I will go and deposit it in the bank. That's passive. This is actually an active thing. If the phone rings, you have to react to a customer requirement, a tenant requirement. So it's a very active business.
I don't know whether I'm mixing things up here, but many people have incorporated their property portfolios into a limited company on the basis of it being a business. And that is the eligibility criteria for Section 162 relief.
I don't think we're mixing things up. What we're doing is we're demonstrating we've met an acid test of a number of hours spent within the business transacting that business. Now, if it's an investment is gold. You buy it, it sits on a shelf, and then you sell it at some point in the future. You don't do anything to it. This is an active business. You have leaky roofs. You have call-outs for blocked toilets. It's active. You've got to chase rent. You've got to evict people. You've got systems and processes and people in your business.
Now, I want to make a firm point to all of you, because it's something I feel passionately about. And it's about when you choose people to be part of your power team. I rely on a close network of trusted advisors, professional advisors who are experts and skilled in the trade, in their profession, if you like, to help me and to advise me on different policy decisions within my business. Now, within every set of rules that are out there, there is sometimes ambiguity, and there's sometimes interpretation, and there's sometimes stuff that isn't particularly written down. Now, what you don't want with your advisors is people to make up rules where none exist. You want people to read the letter of what is written down in the rule and interpret it in a way that allows you to take your business forward and not hold it back. Have you found that there are these two types of advisors, if you like, that some people act as roadblockers and some people act as business enablers?
Absolutely. And if I refer to tax, because being a chartered accountant, if I look at tax, some people will quote HMRC's website as verbatim. Whereas what I will tend to do is go back to legislation.gov.uk, which is what Parliament wrote. Now, HMRC will interpret things how they want to that suits their side of the argument. Legislation, however, is the neutral position, and you might be able to argue a different angle on that. So it's always important in my business to look at things in a very entrepreneurial way and to say, how can we work within the rules that are there, the legal frameworks, and use that to our advantage? Permitted development being one, where you work within the planning framework, but you exploit opportunities that are available to you.
Yes, yes. And you want that mindset in the advisor and the professional help that has that can-do attitude within all the rules that are laid down. That's the key thing, isn't it?
Absolutely, absolutely.
The one area that I think I feel that can be a tripping point for some people when they're applying for the business bounce back loan is the issue of turnover. Now, you can claim as a loan up to 25% of your turnover, up to a maximum of £50,000. Now, my view on this is that if your direction of travel pre-COVID-19 shutdown was that your business was heading for a 10k turnover, it is going to be a pretty tough call to kind of say, well, actually, we were heading in the direction of 10k for the year, but if it hadn't been for COVID-19, we would have suddenly shot up to 200, and that's why we're claiming 50. I think that your direction of travel should indicate that you are heading in the direction of 200, or if you're planning to claim a quarter of that, which is 50. What's your view on that?
I would completely agree with you, Ranjan. The important thing to remember here is you are self-certifying, and retrospectively, you could be pursued for fraud. Now, I think I said it in our previous video. I think the fraud clause will only come in if people go into arrears, because that will be a trigger point for the lender to start lifting the lid on your business and retrospectively analysing. But do not make up a turnover that your business could not legitimately justify on a forecast on the assumption that COVID-19 had not happened,
That's a
because
good point.
it will be audited retrospectively, specifically if you go into arrears, but it may also be audited randomly.
If you had 5 properties with a turnover 50k rent on all of them, and that was your portfolio before COVID-19, you can't suddenly say that, well, the week after we would have made 200k from that rent roll of rooms. It's just not happening, is it? That's what we're talking about. I think the other important point that we didn't make in the first video is that this is a loan. It's a business bounce back loan, but it's not an interest. It's an interest-free loan for the first year, but it's not an interest-only loan. So after the first, let's say you borrowed the maximum £50,000 based on having a turnover of £200,000 in your property business. The first year would be completely interest-free. And for 5 years thereafter, you would have to pay it back on a capital and interest repayment basis. And that would account to £887 a month, capital and interest. So you'd be paying back about £3,500 in interest over the 6 years. Now, I think what I'm trying to get at is, if you are claiming this money, you've got to be pretty clear that your bounce back activity will allow you to meet the capital and interest repayments over the 5 years. Otherwise, don't take it.
Absolutely. Yeah. I mean, the critical thing is, this is a loan. It has to be repaid. I have said in all of the communications that I have had with everybody, always make sure that if you're taking it, you can get a return on that money that is greater than the 2.5% interest, and that you have a means to pay the capital back. Now, if I take a random example, we bought a house in the north of England for £50,000 because we've got a maximum loan. The rent that you're likely to get on that house would circa be £500 per month. Therefore, you're not generating enough to pay the loan back. So you would need additional funds to pay that back on a monthly basis. You have to make your own commercial decisions, but you must make sure you have the money to pay the loan back.
Now, some people have been talking about whether or not you should take this money. It is a bounce back loan. I think it's up to you as an entrepreneur to decide what bounce back means for your business. But the important thing I would say is we are in uncharted times. We don't know what's happening with second wave and all the rest of it, of this virus, and how it's going to go down. And isn't it better, my gut feel is to take advantage of this opportunity to keep some capital in reserve, and if you don't need it within the 12 months, hand it back. If you feel you can make more than the cost of keeping that capital, then keep it for the 5 years.
My personal view is, this is something that is to boost the economy. I liken it to a motorbike. You can pedal along with your feet and make it move. But what the Chancellor wants you to do is stomp on that starter pedal and make the engine make the motorbike move much faster. And that's the whole idea, is to get out there, to get the loan, invest it in your business, whatever your business is, and make that create jobs or wealth through all of the different sectors through the UK economy, so the whole economy gets going. Clearly, you've got to pay it back. Now, if you don't need it, the very least you can do is what some people call stooging, which is where you put it onto a deposit and make money off it whilst you decide what your business needs. But the other thing to look at is 2.5% for a fixed rate unsecured loan. Do you know what your staffing requirements will be in 3 years' time, Ranjan? Are you going to need to invest in some new equipment for your business? This could be a very cheap way of funding something that's in your business plan down the line as well.
Yes.
So to me, it's an opportunity. I've never known it in all of my 50 plus years happen in the UK. And I feel this is a gift horse that you can't look in the mouth without taking advantage of it, if you can genuinely use it and if you can pay it back.
And finally, there's been a load of videos on this business bounce back loan scheme, but quite frankly, if you want proper advice on investing in property, you should keep it here and get your news from this particular channel. Paul Smith in particular on his channel has suggested that you can take this money and you don't have to pay it back. Let's have a listen to what he said. The only thing I should think about is what's the best thing to do with £50,000 of free money. You got to pay it back, or do you? Because if you know what you're doing for a limited company or LLP and you got no personal guarantee, they can't actually make you pay it back. Well, I mean, I thought I knew what I was doing with limited companies and LLPs, but I'm sure I have to pay this back. It's a loan. What am I missing, Andrew? Is it free money? Can I get away with it?
I'm speechless. No, and I would not follow that advice at all whatsoever. I mean, even though you're in a limited company, it does say you don't have a personal guarantee, but if you've obtained these funds and you've put a comment out there into the public domain that I have no intention to repay it, then that is fraud. And they will lift the veil of incorporation and come down to the directors or partners in the LLP and seize the assets of those within those entities. So it's not a piece of advice I would offer anybody, and I would run for the hills, and I would be very wary of listening to a single word from anybody that says things like that.
And of course, people don't get this. People think, oh, limited liability and all of this, I'm protected, my company can fold and I can walk away and all of that. But the veil or the protection of a limited liability company can be pierced if the director has committed fraud in the name of the company or being acted criminally. Is that correct?
That is absolutely correct. And when you put wind your company up, you get administrators involved. And one of the things they do is they do a retrospective audit of the transactions of the prior 2 years. And they're looking for transactions that you've entered into that you knew were wrong. And they're looking for fraudulent and wrongful trading. And that, I would say, is definite fraudulent and wrongful trading. It can get you struck off as a director for up to 5 years, fines, imprisonment, as well as caught under the Fraud Act. So it's not something I would recommend at all.
I mean, I think the problem we both have with the wording that Paul used in his video is this is really the intention here. Now, if you take out a £50,000 loan with no personal guarantee and you endeavour to do trading activity and circumstances happen and it folds and you just have to fold, then that happens. But if you deliberately go out to take out a loan with the intention of folding the company so that you don't have to pay the loan back, then, you know, that is just, well, you can't do that and get away with it.
No, you absolutely can't. And in all of the loan terms which I have read, it is said that the money must be used for the business. So that isn't going out and buying yourself a flash car. It doesn't mean repaying your director's loans. It means used in the business for the business, to grow the business and to make the business profitable and secure.
Now, you raised an interesting point there. Does it actually say specifically, because someone asked me this actually, about whether they can use these funds to repay directors' loan accounts. Now, my understanding is that that's not in the spirit of bouncing back. And that might be a silly thing to, well, I'm not sure whether that's a decent business thing to do anyway, but Although it's not in the spirit of it, is it actually in the letter of it that you can't do that?
It does not say that you can't do it, but it says the money must be used in the business for the business. So I would suggest the business using it to repay an existing loan that's due to the directors is probably not within the spirit of what was intended by that draft that had been put there. It's a grey area, and I would not like to do anything that sort of crosses the line into, I might be on the wrong side of the law.
Okay, yeah. No, that makes perfect sense. So what we're just trying to do is keep it all real. So landlords haven't been given much help by the government during this COVID-19 crisis, and the business bounce back loan scheme seems to be finally a package of measures that is worded in a way where property businesses can avail of that help. I say avail yourself of that help. It's interest free for the next 12 months, and we don't know what's to come. These are unprecedented times. We don't know whether there's going to be a second wave of the virus, and it's good to have some fuel in the tank to help you cope with whatever the next year throws at you in your business. Andrew, what are your thoughts?
Well, my thoughts are it's going to be an uncertain 12 months. And I think I've said it to you before privately that I think there will be a belly flop coming when things like VAT and income tax get repaid in the future. So at that point, you might need these reserves in your tank in order to bounce back through the next phase of this cycle that we're going through.
Tell us what you think in the comments below. If you've applied for this loan, let us know who you've applied with and how you found the process. Whether you agree or disagree with what we have said, please comment below. And remember, like this video, also subscribe and hit the bell icon if you want to receive regular updates and ideas to help you forward in your property business. Bye for now.
Bye for now.
Hope you enjoyed that. Subscribe and hit the bell icon so you get content as soon as we upload. Also check out some of our other videos, and don't forget we have a monthly networking live stream which is attended by more than 1,200 people. To attend this month's live stream, register for free at bakerstreetpropertymeet.com and also comment below.